What's up, everybody? It's Dr. Rell. Today, I wanted to talk to you guys about the new system that I'm dropping on my YouTube channel for option plays. Okay, this is being dropped because there's a huge demand for individuals looking for plays that best suit their trading strategy and their financial situation. I've been helping tens of thousands of people over the past 4 years from all levels. Okay. And I understand these different types of traders because I fall into all three of these categories on any given day. Okay, so here's the goal. The goal is to drop an option play or up to 3 at the end of any video that I post. Now understand, I don't post videos all the time. I just do it when I can. But when I do, I will try my best to make sure that I include an option play that you may or may not get into. Whatever you do, it's up to you. But I'll get into that in a little bit. How am I going to do it? I'm going to drop it. I'm going to break it down into 3 different types of traders. We have the Minnows, we have the Dolphins, and we have the Orcas or the whales. I use fish analogies because you already know that if you follow me on Instagram, your boy likes to fish, especially on the weekends to decompress or whatever. That's my escape from this market and from my job and from whatever that stresses me out. That's how I keep myself zen. All right. So anyway, we got the Minnows, the Dolphins, the Orcas, the Minnows. The Minnows are newer traders. Like, they represent newer traders or traders with smaller accounts. These traders may be trading between $500 and $2,500 as far as an account size. Now, these traders, you're trying to figure out the market, how to trade, what's option trading, how to understand the Greeks, all that stuff. And you're not trying to sacrifice the bag as you go on your journey to figure this out, right? So the option contract prices that I'm going to put out for those individuals is going to be between $20 and $50. Okay, so that way you guys can be comfortable looking into those places and choosing whether or not that's something that you want to get into. The next one is the Dolphins. Okay, the Dolphins are like the intermediate traders. These guys or girls who have been around the block a little bit, they have a little bit more flexibility in their trading. Okay, and they're in a position where they're now trying to grow their account. And their portfolio size could be $2,500 plus, right? But the contract price that I'm going to focus on for those individuals is going to be $50 to $200. Okay. Now the next size up is going to be the whales, the Orcas. Okay. And these are, experienced traders or traders that understand the risk factor, or having higher risk, or can put on more size on certain plays. So these contract prices will be $200 plus. Likely contracts or stocks that fall under that might be Netflix, might be Nvidia, those more expensive stocks, essentially, that would essentially be tied with a higher premium. Now, that being said, that's the plan. Okay. And where's it going to be? YouTube is one. Typically, it's going to be at the end of my videos. Okay. Now, you might see me clip that portion of the video and then put it on YouTube short, or add it to Instagram Reels, or put it on TikTok, or share it on Twitter. And of course, if you guys already know you're a member of the KGU, Categorize University, then you know I'm over there as a crowd member as Cook and Rell. All right. So if you didn't know that was me, that's me. Go ahead to the Crown member section and just turn on your alerts for me and everybody else. They're all goats right over there. Okay. So I will be tagging everybody when I have those plays posted. Okay. That being said, if there's any questions, any comments, concerns, you let me know. But I will always have to say this. When I post these, it is not a suggestion for you to buy, hold, or sell. Okay. Anything that I post is for you to do your own research and make a decision to play something or not play something based on your trading strategy and your financial situation. Okay. These are real life examples that I'm using, and I'm running personally. I may or may not happen to a play, but you have the option to do so if you so choose. But if it don't work out for you, don't cry to me. Okay. You have to do your own research. All right. But if something messes up or doesn't go your way, we can talk about it all day. But the plan is to post the levels, post the stop loss and the take profit targets, as well as the contract itself that I'm looking at for that particular play. That way you have everything that you need to know in order to make a decision on whether or not that's something that you're going to put on your watch list or your radar. All right. So and the first on the list, the first on the hook for the Minnows is silver, ticker symbol SLV. Now, with silver, we've ran the play from the 20s, low 20s on up, and we made a couple 100% in profit on this play. If you've been rocking with me, you already know, right? So, but right now it's forming something called a head and shoulders pattern, which is a bearish pattern, and it has about a 77% success rate. So when I see this pattern forming, I typically hop all over it. So on the 11th, on Thursday, we've seen a strong rejection at a low volume node right around the 2878 range. Okay. Actually it was 2888, and then that gapped all the way down. I'm looking at the 4-hour chart right now. It gapped all the way down to about 2812. Right, which is where it closed on Friday. Now, this is how I'm looking at silver right now. Okay, towards the upside. The only way the upside really works is if it breaks above the 2878. I'm sorry, 2888, 2890, and then I'm suspecting that we're going to start seeing the higher highs and the higher lows. So towards the upside, I'll go over those levels. That's 2918. The first one I'm looking at. Then it's 29.57, and then after that, I see us going all the way to $30.49. Okay. Now, with the levels that I give you, I will also show you what that payout looks like if it does run that in that direction. Now, towards the downside, essentially, if I see weakness below the 2812, the current level that it's at, then I'm likely to grab some puts and go short on this position, with the first target being 27.49, 27.17, then all the way down to 26.54, 26.11, and then my final target of 25.35. Okay, that is where I see it going. Actually, my final target is 23.52 on the Moo investment app. You will notice that silver has there's a lot more unusual activity betting towards the downside versus the upside. Now, there are a lot of upside to silver, but there's a lot of indecision going on in the market right now, so nobody really knows. However, before the market closed on Friday, you've seen a lot more people betting against the stock versus for the stock. The contracts that I'm looking at right here for the puts to start is the silver 2750 July 19th put. Now, again, you can grab a further out contract, let's say October. Of course, just know you will pay more for the premium, but you give that yourself that much more time for it to run. Okay. So notice that the theta is 0.02. That's really good. For me, theta, it always has to have a 0 after the decimal. Okay. And then the delta of 25, that's perfect. All right. So anyway, that's the contract I'm looking at. Now here is where we're going to be at with the levels as far as the gains, right? So right here, I'm showing you at 28.12, this is the current price. If we were to open at the current price, the theoretical price for this right now would be $11 versus $17 to which it closed on Friday, right? First level, 27.49, that's a 98% gain, selling at $33. 27.17, 205% gain. 26.54, that's a 491% gain. 26.11, that's a 724% gain. 25.35, which I believe is, nope, 25.35, that's a 1,163% run up. And then the last target for me was 23.52, which is a 2,238% run up. That's you buying a contract at $11 and then selling it at $397. So let's just say you're a minnow and you're just trying to get, some skin in the game. You don't, want to risk it. Imagine you put $11, you got a $500 account and you put $11 on the contract and then you sold it for $397. That'd be dope, right? So, but you really got to pay attention. The risk is low for you, right, on that. But you also need to be aware of where you are, your stop losses, your entries and all that stuff. And then you also have to establish some patience and then identify when the stock is showing signs of a reversal, okay? But that's that. So now let's look into the call options, okay, on the upside. So if we opened up tomorrow at the current price of $28.12, we're looking at a price for the premium of $20, okay? Let's say 21 round up, okay? First target of $28.78, that is 89% gain. Second target, $29.18, that's 189% gain. Third target, $29.57, that's a 305% gain. And then the final target of $30.49, that's a 614% gain. So you essentially would have purchased a option contract at $20 and sold it at $200. That's pretty dope, right? So either way, you can win. In reality, you can hedge your bet. You can buy an $11 put, and you can buy a $20 call and let it go. I mean, what's going to happen, right? If you run up and the other stock, the put option doesn't work out, but it runs up, then what are you out? $11, but you're up how much, right? And vice versa. If you put $20 into the contract and then it pulled back on your $11 contract, then what are you out? You're $20. You wouldn't even lose the whole 20 because you know to cut that out, right? Before you lost it all. So you wouldn't even lose the full 20, but your $11 would have turned to maybe $300. So really think about that, okay? So that's what I got for you. Hopefully I can get more of these out. It took me a long time. It doesn't take me a while to do assessments, but for me to try to incorporate it into the video and speak to it like with just my phone and my tablet, I really need to figure the system out, but I will. And when it's more efficient, I'll be more consistent, all right? But hopefully this works for you guys, the minnows, the dolphins, the orcas. If you're a dolphin or an orca, just because you are a whale guy or whatever, that doesn't mean that you can't play a minnow play. And just because you're a minnow doesn't mean that you can't play a whale play. It's just categorized so you guys can understand, or so we can compartmentalize the risk variances of traders, okay? So, hey, this is Stocks for Rell. Please hit that like, subscribe, comment down below what you think, and I'll see you in the next one. Take care.